All right. Nasdaq futures review, July 21st, 2026. Last week I did some dog sitting, so at someone's house, and I had some terrible internet. I didn't post as many videos. I actually have one or two videos saved for reviewing last week's price action. I'm not gonna lie to myself here. I haven't been doing too good on the markets lately. My discipline hasn't been there, and I don't know why. I just haven't been patient. I haven't been waiting. I've been taking ridiculous trades. I've basically been gambling. But we're back on a winning streak, and um, I need to keep my mental intact at severe on a severe strictness, so that I don't keep messing up, like taking trades and breaking my rules. I need to stay so strict to my rules. And just like I say in every video, 10:20, 20 minutes after the macro is when the hour decides where it's going to go. Today I'm going to show you that again. Literally, um, there honestly is a bunch of slop this morning. I saw some pretty good entries. Market opens right here, sweeps a previous day high, breaks to the downside. There is a small fair value gap right here. Could be the first fair value gap, but honestly, this overlapping fair value gap, I believe, is the first fair value gap of the day. I seen us make this fair value gap and then close below it. And I thought about entering here, but we were moving so quick. And this is 9:43. First 15-minute candle didn't close, so it breaks my rules. I want the first 15-minute candle to close before entering in the morning. But I saw it here. I thought about entering because there, and then here I was like, I'm glad I didn't enter. But then, of course, as it got down here, I was like, man, that would have been a good short. Overlapping fair value gaps, close down here, and this right here. This is the best way to look at a change in the stated delivery. You almost always want your change in the stated delivery to be um, a bullish and a bearish candle smooth. Like you see how those are smooth right there above the consequent encouragement. That basically is like an order block in itself. I know an order block should only be a down close candle if you're moving up and an up close candle if you're moving down. But when they're together like this in a market structure shift, they're just that much better, that much more useful. If but I'll show you where I actually took a trade. Look at this chop this morning though. Fair value gap doesn't use it. BPR pushes right through it, uses it to go down. I had a bullish bias because on the daily time frame, see how small this wick is? I had a feeling yesterday came up here, missed the previous day high. Inside day, had a feeling small wick would clear that high, maybe go into this daily fair value gap right here to push a little bit further. The next time frame I used was a 15-minute. So these grid lines, this is regular trading hours, new day opening gap. This is where we close, this is where we open, and these are all the quadrants for the new day opening gap, regular trading hours. And then come down here, you see how the 15-minute stayed above 25%. If it's a super bullish day, it's only going to fill that new day opening gap by 25%. Drop down to the 5-minute. We have the weekly first fair value gap here. We did draw outside of the lines. We closed below it. I wasn't sure if we're going to still be bullish here, but I wasn't going to short the market. I would have just sat and waited. I was paying attention. Look at this. Bullish, bearish, just like I pointed out here. Bearish, bullish. So this makes for a good change of state delivery. I saw the 5-minute close above this, and when it closed above that, which was this candle, 1019, my time that I love is 1020. 1020 I entered high. I didn't think we were going to get a retrace. I was actually a little mad at this candle right here because I wanted to just see it close above this fair value gap, and then I was going to enter off this fair value gap or close right here above this change of state of delivery. But I guess the 5-minute change of state of delivery was better. I just didn't think we were going to get that much of a retracement. And I won't lie to you, I did exit early. I had my take profit up here, at $100 somewhere. But like I said, I'm on a bit of a losing streak, so I just kind of wanted to. I got in this headspace where I just want to grow my portfolio slowly. Every time I start asking for more, every time I start wanting to make enough to replace my job, then I lose money, to be honest with myself. But today I'm happy with this. That's a good little grab for me, and it proves that I could have got the full amount if I wanted it. Um, yeah, 1020, you got a 5-minute change to the state of delivery plus a 1-minute market structure shift. It didn't clear this low. Oh, I want to show you what else I was watching on here. There's a look how smoothly it respects OTE right here. I wanted to enter down here. Like I saw this candle close 25 cents above OTE. Because if you look, close was 85.25, and if you look down here, 85. So 25 cents. I saw this candle go down, and once it started moving above, I wanted to enter. I knew it wasn't smart, but I just wanted to enter. Perfect OTE with I already had a bias of it moving bullish because we had a liquidity sweep, I think on the 1 hour. Oh fuck, I don't want to show that side. All my losses. But on the 1 hour, we have a 4-hour fair value gap that it dipped into 25%. But see this one, see this liquidity right here? Takes that liquidity. 15-minute candles close above, because this was the closing of the 15-minute candle. Closes above 25%. 5-minute had a 5-minute change state delivery, and then on the 1-minute, you had a bullish fair value gap and an inversed or reclaimed bullish fair value gap right here. Bam. Honestly, my risk to reward was 2 to 1, 2 risk to 1 reward. But sometimes to learn to figure out what you're doing, you got to do that. Even ICT says that. Let's log out of my real money account and go to my paper trading because I want to show you something that I did yesterday, which I think is awesome. Oops. Right here. Yesterday, market open, little pump and dump, and um, I honestly took a few losing trades in this because there's like this 15-minute BPR here, and we broke down. I thought we were going to go down, and we just came up and then hit a daily imbalance. And a lot of people seen that and shorted. I saw on X, but I didn't. I lost $150 of my real money yesterday, so I signed into paper trading because what time? 10:25. Where's 10:20? 10:20 is right here. But at right after 10:20, I see what's this? Bullish bearish candle, a pair sitting at a high. What's it do? Close above that. What's it also make? A fair value gap overlapping that. Bam. I did enter late, paper trading. I saw this retracement, added a second contract, bam, took profits at this high. It was like $260. I literally swear I'm a better paper trader than a real trader, but that's because I get emotions way, way, way too involved with my emotions. If I keep my emotions out of it, I stay disciplined, I follow my rules, I make money. If I don't, then, well, I make bad decisions and I lose money. So today I'm actually proud of myself because this was a lot of bullshit right here. And I waited for 10:20. Isn't it funny how yesterday's 10:20 candle was going down and then um, it switches? It's like, I don't know, 10:20. I don't know. There's got to be other people that see this and not just me. 10:20 is the time between 10:15 and 10:25, but I would have to say more towards the 10:20 and 10:25 time frame for better market entry entries. Like, imagine if I was more patient with this. Like, I didn't think there would be a retrace really because we had a 5-minute change to delivery. I thought that shit was just gonna run, but we get a good retrace, goes up. I should have held my $100 take profit, but it is what it is. I made money today instead of lose money, so that just feels beneficial either way. And that's all for today.